You know the theme for the week, in case you missed Monday, missed Tuesday. We've been talking about our mantra this week. Jump on the work, don't let the work jump on you. And just as a reminder, in case you missed it, here's Miles Canton from Sinners, just to remind everybody.
Morning, Pop.
You up all for early, son?
Like you say, jump on the work, don't let the work jump on you.
That's right. And we got more work. This time from ARM, we can put it up on the screen. Betting on cement, latest report from ARM, which is looking at the cement industry, not just globally, but also in Nigeria. We're happy to have Ameerat Adamul, investment research analyst at ARM, to discuss this report. Ameerat, you're very, very welcome. Thank you so much for joining us. Let's start globally. The dominance of China on the global stage with respect to this nice chart that you have here. How much weight does China carry when it comes to cement production? Okay, so when you look at 2023, where global production was 4.1 billion metric tons, China accounted for about 51% of that at 2.1 billion metric tons. And this dominance stems from their large-scale infrastructure as well as urbanization that we saw in 2023, but low property markets in 2024 is expected to reduce output, but in 2025 we expect a rebound in terms of China's production. You're forecasting global demand for cements to grow, I think, about 4.1% in 2025. In fact, you even have it in here. So what are the triggers for that? Why do you think global cement production is going to jump up by 4.1%? Okay, so as I said, we expect a rebound in 2025. Yeah. So this will be driven by the Asia Pacific, particularly India and Indonesia, where they have large-scale infrastructure as well as housing initiatives ongoing there. And we also have the Sub-Saharan African region, where obviously we are big on infrastructure over here. And also the China's Belt and Road Initiative, which is an infrastructure development strategy that encompasses about 150 countries. So this is expected to boost cement demand in 2025, basically. Now, what about the environmental impact of cement production? There's been your report talks about it in terms of what it does, the climate impact and so on and so on. Are we seeing adjustments from the respective players across the globe to try to be more environmentally friendly with their cement production? Okay, so the Global Cement and Concrete Association, they actually stated that cement carbon emission is a major emitter, in terms of carbon emission to the environment. And globally, we've seen players try to reduce their carbon emission because now we are all big on sustainability, ESG. So we've seen initiatives like carbon capture as well as alkyl fusion processes gaining traction. So all these are just basically to reduce carbon emission. And also in Nigeria here, we are seeing players also try to reduce their carbon emission by use of alternative energy and all of that. So yeah. I mean, I know, the Dangote refinery looking at this whole CNG drive and alternative energy drive is an example. So domestically now, coming to domestic things, domestic matters, you have another chart here looking at capital expenditure for the country, all through 2025. Also, really great chart. You've got like 3 variables or 4 on there, where you've also got the percentage of capex that's also, year on year. Is this increase, or rather, Nigeria's cement industry going to be one of the biggest beneficiaries of capex expenditure in Nigeria? Yeah, exactly. Absolutely. So when we look at the approved 2025 budgets, we have 23.9 trillion allocated for capital expenditure. And this is significantly higher than the 13 trillion that we saw in 2024 budget. So, and we also see the new administration, the Renewed Hope Housing Infrastructure Development Plan, where they're trying to close in housing gap. So all these are just expected to drive the cement industry. So cement players are actually the biggest beneficiary from government capex expenditure.
All right. I'm glad you mentioned the cement players that will benefit from capital expenditure. There's a great table that you have up here where you put the major players along with their revenue growth, profit after tax, and profit after tax growth. It's pretty much just three of them, right? So yeah. Dangote Cement, 3.5, that's trillion, 62% revenue growth, profit after tax of 503 billion, 10% growth there. BOA in second place, 876 billion, 90% revenue. They're really growing there over at BOA. 73.9, I guess 74 approximate profit after tax in the second row for our viewers, 6.4% growth. And then Lafarge WAPCO 696, 71% revenue growth, 100 billion PAT, and then that growth of 95. Although I hear Lafarge and there's all this delisting talk around there. But can you define an oligopoly for us?
Okay, so to put it simply, so an oligopoly is when there are few players that are dominating a particular market space. Yeah. And when we look at the Nigerian cement sector, it's actually an oligopolistic market because we have three major players that are dominating that space. So that makes it an oligopolistic landscape, basically.
Yeah. Okay, so based on that, you also have Porter's 5 analysis of the industry. I don't know if you can go through all 5, but let's try. So starting with, I guess, threat of new entrants. You say it's low. Why is that?
Okay, so to go into cement production, you need high cost of capital. Yeah. And when you also look at distribution network, you need to have various channels. And as I said, 3 players already occupied. So for new players to go in, very, very hard for them to go in. Yeah. And also when we look at the next one, bargaining power of
supply, you say moderate to low.
Yeah, that's because the primary raw material of cement production, limestone, we have that in abundance in Nigeria. Yeah. So in terms of supply, that's not a problem. So the fluctuation of prices is basically, that's why I said moderate to low, because we don't really see that much fluctuation when it comes to prices. And
bargaining power of buyers, that's the next one.
Exactly.
We don't have a choice. Talk to us. You say, what is that? You say it's moderate. That's what you call in your report. Okay.
Yeah, because when we look at the large construction firms, they have that leverage of negotiating with the players in terms of cement prices because they are going large. Yeah. But when we look at our retail guys, our small guys, you don't have a choice. You just have to get the cement at the price you're getting it.
Huh. All right, then threat of substitutes. Yeah. That obviously is going to, why is it low? Spell it out for us.
Okay. So cement is unique because you need cement for a very strong foundation, to strong infrastructures. Yeah. Although we have some substitutes, but they have limited use, like bricks, asphalt. They have limited use. But when you look at cement, cement has various uses. You can use it for so many things, to build houses, roads, and all of that.
Yeah. All right. And then I guess the industry rivalry, moderate to low.
We have 3 players.
That's it. That is it. All right, looking at how would you assess the attractiveness of cement stocks on the Nigerian Stock Exchange?
Okay, so let's start by looking at the index in which they are. That's the industrial goods sector. Right. The sector has done about 28% year to date. Major drivers, cement players.
That's right.
So that just shows the attractiveness of the stocks. And when we look at them individually, WAPCO has done 80% year to date, Brass Cement 45%, Dangsem about 2%. So they are all returning positively to investors, and we are seeing rally in that space every day, especially with the whole government infrastructure plan and everything. Cement players are actually very attractive and big.
Gotcha. So I guess overall, looking at the report, what would be your assessment of the sector? What is the report, this report, which is great work, what is this report telling us about the cement sector in Nigeria? What's it essentially saying? Just to summarize.
So the cement sector is poised for growth for 2025, long term. It's an attractive sector. For long-term investors, short-term investors, the sector provides a very good return for investors looking to invest there because, as I said, infrastructure.
Yeah.
Every day, people are building. Whether it's real estate.
Which, by the way, is now, due to the rebasing of GDP, is now the third, according to the Bureau of Statistics, third largest, right?
Exactly.
Yeah.
And if you look at it so far, the construction, manufacturing, even cement, they are returning positively to the economy. They are part of economic growth. So the sector is well poised for growth in 2025 and beyond.
Hey. You jumped on the work. You didn't let the work jump on you. Ameerat Adamul, Research Analyst, ARM. Thank you so much for this great report. We appreciate your time.